trying to connect.
Can you hear me? Yeah. Good afternoon. If everyone will find their seat, I'll promise not to come up here again. All right, so we got the investors panel, which has 4 very different types of investors. From EnTrust, we have Omer Donnerstein. We have from Neptune Leasing, we have Harris Antoniou. From Robotti, we have Bob Robotti, who always smiles after he hears a Tidewater presentation. And from American Shipping, we have Paul Magnussen. So, Paul, we'll start at your end. Take a couple minutes and tell us about your company.
Okay, thank you. I mean, it takes some time, I guess, to change a name. So American Shipping has been the name, obviously, since 2005. Public company in Oslo. We were used as a vehicle, basically, to finance 10 new-build MR tankers at the Philly shipyard. So tankers in the Jones Act, which has been a leasing portfolio that we've, call it, managed since then. Long-term bareboats to OSG. We changed our name a couple of years back to AMSC, which is our ticker in Oslo, because we've expanded the, call it, bareboat portfolio to also include a large offshore construction vessel on bareboat charter to Solstad. And then towards the end of last year, we actually sold all of the vessels, all the 10 tankers here in the Jones Act, and also the construction vessel. But actually sold the tankers for cash, and we sold the construction vessel for equity in Solstad Maritime. So today we're basically an equity owner in an offshore services business. We paid out a large dividend following the Jones Act transaction, but we kept some of the cash to continue to invest in the maritime sector. We're agnostic to shipping or offshore. And I think we'll probably come back to this during the talk. I think it's more likely for us to continue to invest in offshore going forward. We think there's more opportunity in that space.
And Bob, you've been investing in energy for a very long time.
Hi, so I'm with Robotan Company. So we're investors in public market securities of energy companies, shipping companies. I first invested in the offshore business in 1976. When the offshore business was still kind of in its adolescence, I guess, at latest. And so therefore seen plenty of cycles in the business. And I think the market frequently gets, has a short-term focus and provides opportunities for investors who have a longer-term time horizon, which we do. In the meantime, the energy service offshore business we think is extremely interesting today. We think the supply-demand situation in pretty much everything offshore is in strong positions. There's relatively little available existing supply. There's identifiable growth and demand for that. There's financing today. Yes, there is occasionally some new builds, but really nothing. Part of that is because the economics don't quite make sense. And here we are at a shipping conference, and a regular thing is you talk about order books. And so effectively, you have an industry with no order book. And so we think that's an interesting dynamic that highlights what we think is potentially the opportunity. In the meantime, we think the stocks are pretty easy to identify that they all sell below intrinsic value, and that's broadly, that's the boats, that's the rigs. And intrinsic value is the present value of the future cash flows that are clearly identifiable. And there's a number of growth opportunities too. So we think it's an exciting time with plenty of opportunity from here.
Harris, tell us about your company.
Well, to start with, I think after the introduction of Bob, we can go home now because he covered everything in 3 minutes, so congratulations. My name is Harris Antoniou. I'm the founder and managing director of Neptune Maritime Leasing. Although I've been a banker for the best part of my career, always focusing on the energy, commodity, and transportation space, about 3 years ago, we decided to venture into leasing simply because we thought that there's a large dislocation, which is diminishing now, by the way, but nevertheless, we thought that from a risk-reward perspective, it's a great position to be in. We did it. We were very fortunate to have people that believed in us and supported us in our growth. We added 2 large investors. The first one was the Latsko family office out of Geneva, and the second large investor was Costa Mare, that about a year ago decided to support us with a very large injection commitment. And I have to say that in the past 12 months, we've grown rapidly. We've quintupled our exposure, predominantly in the dry bulk sector, where we added about 20 ships, but also importantly, in the offshore sector, because in fact, I've detected similar trends and characteristics with the offshore market that I saw as a young banker in the mid-90s, early to mid-90s. Hope you remember, as the industry was coming out of the late 80s, early 90s recession, we had the same characteristics, you know, low order book, practically no order book, companies in a better health because they had come out of restructuring, and a market which was looking for more and more ships. That's what we saw last year. We decided to venture into it. And in fact, I'm happy to describe later our exposure in the offshore industry has grown, and we're happy to look at it with more industry participants and help them grow their business plans.
And EnTrust, tell us about your business.
Thank
You've made an acquisition or 2.
Yeah, hi everyone. My name is Omer Donnerstein. I'm a co-PM at the Blue Ocean funds of EnTrust Global. By the way, we are the original Blue Ocean, not the guys that took our name 6 months ago. When EnTrust launched this business late 2015, the idea was to leverage on what we describe as the banking dislocation, banks pulling out of ship lending, and the idea was to launch a direct lending platform that will provide debt capital to the shipping industry. But even back then, we knew that if we want to grow this into a big business, and just to quantify this, since inception, we've raised 4.5 billion. We've deployed 4.3 billion. We have a lot of dry powder today. But in order to be a big business, we had to be counter-cyclical, not only on sectors, so invest across all sectors, from the generic to the, I would say, the most specialized sectors, but also invest across the capital structure, whether it's debt or equity and everything in between, and you know, be active in the mostly in the private markets, but also in the public markets, primary business, secondary business, etc. So we are really a one-stop shop that provides debt capital across a very wide spectrum.
So the next question will go to each one of you, and take 2 or 3 minutes each to talk about where you see the opportunities in offshore and energy. And Paul, we'll start with you because you've got a little bit of cash these days.
Well, thank you. Yeah, so I mean, for the past, call it, few months here, we've been trying to find some new interesting projects to invest in. And as I alluded to earlier, I think it's easier for us to at least try to identify those within the offshore sector compared to shipping. There's still a lack of capital in the offshore space, so you know, owners who wants to expand are typically welcoming, you know, potential outside investments. We proactively have kind of looked at the oil services or offshore services space, right? So subsea vessels, you know, anchor handlers, PSVs. We find all of those, call it, segments interesting. There are some opportunities out there. I mean, the outlook for the sector and the expectation for the sector is so positive now that if you own a vessel today, you would typically want to have a very high price for selling. It makes it difficult for us to invest. There's some new build projects that are seeking capital, have not really been able to get that capital because even though the market is strong today, it's not quite there to fully support new builds. So in order to make a new build investment today, you have to obviously put up equity now, wait 3 years for the vessel to deliver and produce hopefully cash flow. But the rates today are not really fully there to give you some sort of a good equity return. So it's not easy actually to find the right projects right now. I mean, there's a lot of capital obviously in the maritime space. But in offshore, there's still a lack. So I think that's at least one thing that we have going, and I think we will continue to look for opportunities, you know, in the offshore services space.
And Bob, if you need more than 2 or 3 minutes, go ahead. Where do you see the opportunities in energy and offshore?
Well, of course, it highlights one of the things I did forget and to enumerate. The fact that consolidations clearly are an opportunity because for a multitude of reasons, right? There's cost advantages in doing it. There's synergy advantages. There's a number of candidates that logically provide themselves and are available for, we think, less than what the present value of the assets are. So consolidation is something that clearly makes sense, will continue to happen, whether that's offshore and diamond combination that was recently announced. So there's a lot of different things. But what I would highlight is, since I've done this since 1976, it's kind of like there's a lot of similarities, but there are differences too. So I spent last week, I went to go see the spool base that Subsea 7 has in Norway, and it highlighted a difference. So in 1970, in 2014, the industry offshore, 2014, FIDs substantially slowed down. Oil was still $120. Why did that happen? It was inefficiencies and all kinds of problems in the supply chain that led to huge cost overruns. So the industry couldn't manage at a peak positive time. Today, I think we're very different. The supply base is totally different. There are fewer suppliers. The process is being managed much more intelligently. That also is mitigating the fact that there's cost overruns. And so it's also moderating the volatility that you normally get. So I think you really have a much more reasoned activity levels. And again, Subsea 7, in my mind, having been a Stolt offshore investor since the mid-90s following that industry, I really do think they're kind of in really good insight into what offshore looks like in the economics of it. And therefore, I think the opportunity set is substantially large, including things like where they talk about major projects in Beta Nord or in Wisting, where they say the projects don't make sense because the economics aren't there. But let us manage the process differently. And how that is done is differently, too, because who's at the energy companies doing it and who are suppliers in the process, a number of them have been eliminated, and that's made the system more efficient. So the economics of offshore today, I think, are better than where they've been. And there's more consistency to the business. The other thing is, if you go to any oil conference, they're going to show the oil chart. They're going to tell you at oil price, this is what's economic, this is what's not economic. What we don't talk about is the total addressable market for offshore today is substantially bigger than it's ever been, really. Natural gas has always been economic in the Gulf of Mexico. Much of the world, it has not been economic. And so natural gas is definitely an increase in the total addressable market with different dynamics taking out the volatility in oil prices. So yes, LNG is probably going to be just as volatile as oil, although it has its own kind of trend too. And domestic gas, like you look at a place like Turkey that discovered gas, and it didn't matter where the price of oil or where the price of gas went, those projects were going to be developed because that was domestic consumption that displaced importation. So therefore, domestic gas markets, if you have that, that's again, there's a stability to the business that it's never had. It isn't the volatility that comes from oil. Those are different factors that this industry has benefits today.
Thank you very much. Harris.
Just wanted to add that, in fact, we moved from sort of energy transition discussion to energy security suddenly. And if you look at the demand for oil, which is clearly there, we came out of COVID, demand was in the 80 million, 85 million barrels a day. Now it's at 103 or 104. That's a massive increase in a very, very short period of time, which actually put a lot of pressure in the systems of the oil companies to actually replenish or create new reserves. We heard earlier at the presentation of McCormick from Blythe Energy. Clearly, companies are trying to catch up, and they're trying to catch up as in a typical cycle, there's not sufficient equipment around. There has been a lot of attrition in the OSV space, whether it's platform supply ships, anchor handlers, or in fact deep sea. There's been no new buildings. In fact, compared today to 2013-14, in 2013-14, we were looking at deliveries of about 150 ships per year for a period of 3 or 4 years. And the order book was about 35% of the then fleet. Now we're talking about an order book of 2.5% of the fleet, and again, similar demand dynamic. So I concur with what we heard earlier. I think it's going to be a pretty positive market going forward. It doesn't mean that it's going to be without surprises. The International Energy Agency came up with a report last week that indicated that there's going to be a glut of oil by 2030. Of course, 2030 is many years away, but nevertheless, there could be triggers for a change in the market, and we always need to be mindful. But for the time being, I think it's a very interesting situation, also supported by the demand that we see in wind offshore. So we actually have two markets that in tandem are going through an upswing.
And Omer.
Yeah. So if you look at businesses like us, and I think this is also true for Neptune and Harris, I mean, where we usually operate in terms of the market cycle is kind of coming out of the trough. You see the fundamentals look very well. At this point, banks are still standing on the sidelines. They don't want to put money. They don't want to be the first to the party, and they're not lending. And what you typically see is that at that point you have a window of anywhere from 6 to 18 months where guys like us, if you're nimble, if you have money to deploy and you have the relationship with market participants, you can actually provide debt capital or make equity investments at what we feel is a very interesting, a very attractive risk-adjusted return profile. So, you've seen this in container ship in 2020, 2021, you've seen in dry bulk in 21, tankers 2022, 23, and in offshore in 23. And again, EnTrust, we've made actually one single investment in offshore prior to 2023, and in 2023 alone, I think from 2023 to today, or this part of the cycle, we've invested close to 650 million in various debt and equity transactions in the offshore sector. So that's been kind of like one focus. Even though I must say that this window seemed to be closing with the pickup in the bond market. I'm sure Jim, you know that better than we do. But we see a lot of competition from this angle. And I think, as you pointed out, it seems less opportunities these days than we've seen 6 months ago. I think other things that we focus on is either structured transactions. So one of them being the acquisition of the OMP platform in Norway. This is an energy-based platform that we've started looking at a year ago, and we acquired a few months ago. With the intention to give us, a foothold in the Norwegian market, and also, again, leverage on their expertise and relationship in this business. Another area that we've been active in is the offshore market in the Middle East. Again, I won't spend. We can spend a lot of time talking about the fundamentals.
Actually, spend a minute on that, because I think that's important, and the dynamics as to why that market is interesting and why it's so available to you.
I'll tell you why it's interesting to us. One, in terms of the underlying dynamics, again, very low production cost, probably the lowest in the world. Not a lot of institutional capital. I mean, the funds have been active in some capacity there, but you don't see major Western banks that are providing money to offshore companies there. So, for us, an easy market to go in. One thing you need to note is, you need to spend time, you need to have either boots on the ground or spend a lot of time in that region in order to cherry pick the good from the bad. And we've done. I mean, some of my colleagues have been there for the last 9 months, and we've teamed up with 3-4 operators that we liked. We made some equity investments and some debt investments. I think what's interesting about those deals is that the payout is relatively quick. I mean, you're looking at 2x times debt to EBITDA, or 3x on equity acquisition. So overall, we're still very bullish on that region.
Thank you. Harris, how do you differentiate yourself? And your company.
I have glasses on, differentiate myself from Omer to start with. So
same haircut though.
But there you go. It's a good question, but one distinct characteristic in what we do is, in fact, that we do only one thing. So we only have one hat on, not multiple hats on. And I think that makes it very clear to our clients, to our investors, to our bankers, what our goal is. And our goal is to actually provide flexible, fast and predictable solutions to our clients. In fact, we've started with a base in Europe, Northwest Europe, but we've expanded our business to the Middle East, as Omer said earlier, but also to Asia. We recently opened a Singapore office, and we're looking to expand our footprint there. And out of Europe, we cover the United States as well. We're looking for solutions, not just providing a lease. And we structure our facilities around the requirements of the client. So this has been really the differentiating factor. Now, the fact that we're experienced shipping bankers, we have quite a lot of them in our group, in our team, and the fact that we have shareholders and investors that understand the industry makes a world of difference in dealing with issues, in being able to act very quickly and provide the right solution to the opportunities that we have ahead of us. In fact, talking about the Middle East, we also started, funnily, our offshore exposure, we initiated in the Middle East about a year ago. It was, of course, very successful because the time was right. But it's not, the Middle East is not a market, without risk, because obviously there you have the issue of the charter's convenience clause, which allows companies to just walk away with a month's notice. So one needs to be very mindful of that when one is, in fact, doing business there. That's number one. Number two, I was very surprised to read last month that Saudi Arabia canceled some exploration projects last month, and as a result, some of these cancellation clauses were triggered, and vessels went out of the market, which means that there will be sort of a dip in the market in that area. But luckily, of course, there are other areas of the world that provide support. But what I wanted to say is that it's just not one market, and its market, and actually its vessel, in particular in the offshore industry, has its characteristics that are very, very important for the ability of the owners to charter it properly at the right levels. So one needs to be mindful about that. Thank you.
Bob, you've got a wealth of understanding of a lot of aspects of the energy business, whether that's LPG or ammonia, but your understanding of the broader energy space has helped you find opportunities for investment.
Well, a key theme across our investments today is, one of the major things is North America is competitively advantaged when it comes to energy production, energy-intensive businesses, right? So natural gas is long here. It will be for well over a decade, probably longer than that. And that makes for huge differentials. And so that's one of the things we've identified is, the ability to make petrochemicals, the ability to make ammonia, increasing growth of ammonia. That's part of energy transition. What role does ammonia play? And so, we were fortunate enough there was an opportunity to invest in Navigator Gas the other day, who clearly is well positioned and is a business with two significant owners that have great records of capital allocation, good treatment of shareholders, and an identifiable growing business opportunity in an industry in an area that is extremely attractive. So that North American advantage is something that will increase a significant amount of commerce in transit and shipping, and that's a long-dated, multi-decade kind of opportunity, we think, and that's an expression of that kind of in practice.
Thank you, Bob. Paul, how do you differentiate your company and yourself?
Well, so we're obviously public equity. We have a balance sheet that requires a certain return. We have some cash that we want to invest. We would raise capital for the right transaction, which we've done successfully in the past. New transactions need to be accretive, obviously, to what we have. So, I think it's fair to say that we're probably not the cheapest capital out there. We need to provide something else. I think we like to view ourselves as investor, as co-owner, partner. We don't necessarily need a very long contract to be supportive of a project. We're fine with accepting, the full residual value risk on a project. So I think we have a different approach compared to the more traditional leasing businesses, which we also, have to basically from a cost of capital point of view. So I think if you're looking for the most flexible capital, fast process, I think we can be definitely a partner that you can talk to.
Omer, let's come back again and let's talk about the alternative lenders and tell us how you see the landscape.
it's a good question. I mean, Harris and I do these panels every few months, and it seems that every few months, kind of like the wind changes, and we're looking at a different landscape. I think, you know, I mentioned the bond market now, which has been extremely active in the last 12 months. We've seen a number of deals that we've been working on, and they just went away for the, you know, because at the end of the day, companies were able to issue cheaper debt at the bond market. I mean, there's still, you know, places where guys like us can compete. I mean, the bond market typically look at deals that are 70, 80 million on the ticket size. I mean, we can obviously write smaller and larger tickets. So, I mean, there are ways around that. You know, I think one thing, you know, you ask about differentiation. Apart from doing these panels, I don't think Harriet and I see each other in any deals. We don't typically compete on the same deals, and that's because I think the alternative lending market has kind of developed and matured to the point that everyone, the market, understands, you know, what each of us is good at. I think, look, for us, I mentioned that earlier, you know, when even from the early days, we thought it was a very unique platform in the sense that it combined both the hedge fund capabilities as well with the shipping team, which is self-managed. So you kind of get the best of both worlds. You're able to write large checks. You're able to you know, compete on you know, very complex transaction, portfolio acquisitions, platforms, etc., which some of our smaller competitors were not able to compete. But look, overall, I think this is, you know, our team had a strategy session earlier today, and we were talking about, you know, that it's more difficult today than it was 2 or 3 years ago. I mean, I don't think it's a big secret, but it just requires us to leverage on the platform, on the quality of the platform, the size of the platform. We have 27 people in three main offices, so I think, you know, we have a good footprint in all the large markets.
You're all investors, and Bob, you've had the opportunity to probably serve on more than one board in your career, but certainly your position as a major shareholder and a board member of Tidewater has probably given you additional insights that a lot of investors don't have. Could you spend a minute just talking about what's that meant to the way you think and maybe to some extent invest?
Well, we have served on a number of boards. Uniformly, it's companies in which we have accumulated a position in the company. It's always situations where we believe there's a really long-dated opportunity that the market is missing. And so therefore, we're not worried about the fact that we can't trade around a position, because we don't trade around positions anyway. We buy things, we own them forever. You know, like I said, I got into Stolt Offshore because I bought Stolt-Nielsen. I still own Stolt-Nielsen since the mid-90s. So I buy it and I hold it forever. But therefore, if you are an investor and you do believe there's a really long-term opportunity to be part of the conversation, right, the most important thing of every business is the selection of the CEO and to work with the CEO. And, you know, we've been fortunate at Tidewater to have a great CEO. And so the work along with Quentin has been a phenomenal opportunity, I think, hopefully for both of us. I think I give some value in that process. And of course, the markets frequently are wrong in terms of their perceptions on things, because their time horizon is wrong. And so therefore, there is conventional wisdom that you're regularly going to be confronted with, and you'll need to make decisions. So therefore, you have to have the capability to say, no, I understand why people say that, and I believe that that is fundamentally and substantially incorrect. And there's an opportunity that the market is giving you because it has a perception. And I believe the reality is something different. So to work along with the rest of the board, the management, to say, no, here's the reality. Therefore, there's the opportunity because we've got this price disparity. And therefore, we should be extremely opportunistic. And clearly, Tidewater has been extremely opportunistic. And I think is in a position to continue to be extremely opportunistic in a world where there are a lot of opportunities. So it's an exciting thing to be able to, I think, add value. And of course, my understanding of the business and how it works, it's clearly, you know, it's broadened. You know, it's not just what you look in a financial statement or you're an outside investor. So the complexity of it include people, and people are critical. Success in any business is having the right people and understanding that too. So
we're going to run out of time, so we're going to end it right there. And I want to thank each of you for being part of this panel.